How you guys doing today? How you guys doing today? I gotta keep my invoice. I gotta use my inside voice when I'm making this video. But if you guys don't know, today is my birthday. My friend got me a little gift. You know what I'm saying? Nice little gift today. But I'm gonna show you how I took 2 trades and I lost about like $500 or like 480 trading the Nasdaq today. Well, I'm actually very happy because even though I lost, I had great risk management. I had a good bias on the day. I was looking to go long. I took 2 longs. I did see a drawn liquidity being taken, and I understand why a short played out, but I was looking for long since the day even started. So I did miss my first entry, and I would have probably got stopped out when break even, but I went for another entry and 2 more entries, and I patiently waited for my setups to form. But yeah, let me get straight into the video, show you guys how I lost today. And yeah, don't mind my YouTube. But yeah, going into the day, right? I was leaning more bullish because as you see here, let me show you this is a 30-minute, yes, 30-minute time frame. We have a 1-hour FEG here with resting liquidity inside. So that's basically a turtle soup. If you don't know what that is, it's basically when there's liquidity inside an unfilled fair value, basically a mitigated fair value gap, right? So boom, it's coming into past the equilibrium point. So if price came in and respected this, I was looking for price to move up and move more bullish going into the day, which it did. We had bullish momentum. As you see here, price came, so if this liquidity created a 1-minute inverse, and then most likely could have went long there. But if I were to go long, I was most likely going to target London session highs and not this little internal liquidity range. So regardless, however I would have taken this trade, I probably would have got stopped out. Feel me? So yeah, what I patiently did was I waited for price to take out that internal high, this liquidity point, and then retrace back into a zone and continue moving back up. That's what I was looking for. I was looking for this high to get taken, which it did. And after this high got taken, I was looking for this high to get taken. Price came, tapped into it, and then immediately dropped. Now, going into the day, I was thinking, cool. After this first trade played out, I had a... Who?
Your friend is in a room with my other friend. You can just charge in there.
Do you want to say hi to them?
What's going on?
I'm recording a YouTube video.
It's recording right now?
Yeah, so your face is in it.
Oh, but I can't even see myself. How do you know what's
Because it's on OBS. I'm showing the screen.
Oh, so they don't see my face?
No, they see your face.
Oh. No, I'm not in it.
You're...
I'm like barely in it.
But yes, going back into the day, I wanted this liquidity range to be taken out. And once it got taken out, I wanted it to mitigate the 3-minute fair value gap and then continue to displace higher. Now, what price did was it came down and moved up, pushed up, came down, dropped, and then reversed back up, and then immediately reversed back down. Most likely because it tapped into a 3-minute, which it did. It tapped into a 3-minute bearish FEG, retraced back down. So I was thinking price is most likely going to look for an even deeper zone to retrace in, which it did. Tapped into a 1-hour order block with a 3-minute fair value gap resting below and New York lows that were taken out. All that and manipulation with the trend line. Once that occurred, I went back, right? Price retraced back up, wanted it to retrace into this 5-minute inverse fair value gap and fair value gap also. Once that happened, I entered long, and yeah, see how it played out. But when it came to the managing of risk, I managed my risk to the T. Understanding where price wanted to go, I moved my stop loss even higher once I saw that we had a new low that formed instead of when we created a SMT, because Nasdaq took out these lows. It took out the liquidity range, but ES didn't. So I used that as a confluence that price is most likely going to go back bullish, which it did at the time period, but then it retraced back down. So those were the 2 that I took going into the day. Great risk management. Understood. Not really beating myself on because it's not that serious, you know. Just have to read market structure and understand where price really wants to go. And yeah, I know most likely London highs are going to get taken. We're most likely going to reverse back in the day, but that liquidity range from that internal low or that internal high, internal buy side, it's crazy. It pushed price all the way down here. So I do apologize. I'm in a school library, but it's okay. I just wanted you guys to I wanted to showcase the trade and inform you guys on how the day went. yeah, that's how it went. I will be looking for some more setups tomorrow to form, which most likely is going to cover all the losses that I took today. So we'll be good. We'll chart it out, make sure everything's structured, and yeah, there's a rule.
Who's your friend and my friend are?
Who's your friend?
He's a friend in my business communications class.
I'm not editing this video.
You're not gonna edit?
No.
It's fine. We can just tell him to be quiet when we're there.
Okay. But yeah, that's really the trade. That's what I was going into the day looking for, bullish market. And yeah, we'll see if more setups present itself tomorrow and then the following day. But that was it. Hope you guys enjoy and enjoy love.